Hello everyone. Today we're going to delve into a topic that's of significant importance to investors worldwide: the end of the Ukraine war and its impact on global markets. We'll explore the ripple effects of this monumental event on various aspects of global trading. We'll touch upon the post-war fluctuations in stock markets, the dynamics of Forex, and how commodities have stabilized. We'll also delve into the potential sectors showing promising growth in China, Europe, USA, and Hong Kong. Plus, we'll discuss how this has influenced regional markets. Stay tuned as we unpack how these global changes could affect your investment strategies. First on the agenda, let's examine the stock markets. With the end of the Ukraine war, how have they been affected? In the aftermath of the war, global stock markets experienced significant shifts, with potential growth sectors emerging in various regions. These shifts are not just the result of the war's conclusion, but also a reflection of the changing global economic landscape. Let's first turn our gaze to China. The technology sector in China has shown promising signs of growth post-war. With a renewed focus on technological innovation and digital transformation, the tech stocks are poised to soar. The energy sector too has been garnering attention, as China continues to diversify its energy sources and reduce its reliance on foreign oil. Next, we shift our focus to Europe. The end of the war has spurred growth in the manufacturing sector, with companies ramping up production to meet increasing demand. This surge in manufacturing activity has led to an uptick in stock prices, presenting an opportunity for savvy investors. Across the Atlantic in the United States, the energy sector is also in the spotlight. The stabilization of oil and gas prices post-war has provided a much-needed boost to energy stocks. Additionally, the technology sector continues to thrive, propelled by advancements in artificial intelligence, machine learning, and other cutting-edge technologies. Finally, in Hong Kong, we're seeing growth in a wide range of sectors. From technology to manufacturing, companies are capitalizing on the post-war economic recovery to drive growth and profitability. In summary, the end of the Ukraine war has reshaped the landscape of global stock markets. It's a dynamic environment, with potential growth sectors emerging in response to changing economic conditions. From technology to energy to manufacturing, these sectors present unique opportunities for investors ready to seize them. As we've seen, the end of the war has presented unique opportunities in various sectors. Now let's shift our focus to the world of Forex. The war's end has certainly stirred things up, hasn't it? With the end of the war, the global currency exchange rates have experienced significant fluctuations. And as with any change, this has created a range of opportunities. Take the US dollar, for instance. It's always been considered a safe haven in times of uncertainty, but with the war's end, this status quo has been challenged. The dollar's value has seen some fluctuations as investors and traders reassess their risk appetite. Now, let's consider the euro. The end of the war has had a direct impact on the European economy and subsequently, the euro. The currency has seen some interesting movements as Europe navigates its way through post-war economic recovery. Moving to the east, the Chinese yuan and the Hong Kong dollar have also felt the effects of the war's end. As these economies continue to grow and expand, their currencies are becoming more attractive to investors. The yuan in particular has seen some significant upward movement, presenting opportunities for currency traders. And let's not forget about the opportunities for hedging strategies. The fluctuations in these currencies' values have created a fertile ground for hedging. By properly hedging their investments, traders can protect themselves from potential losses while also potentially profiting from the currency movements. So how does one navigate these choppy waters? It's all about staying informed, understanding the market dynamics, and making strategic decisions. The currency market is a complex and volatile space, but with careful analysis and a solid strategy, it can be a lucrative one. In conclusion, the end of the war has indeed stirred things up in the world of Forex. But remember, with change comes opportunity. The currency market's fluctuation post-war provides intriguing possibilities for savvy investors. Moving on, we turn our attention to commodities. How has the war's end affected their prices? As the dust settles from the Ukraine war, we're beginning to see a significant impact on the world of commodities. The cessation of conflict has allowed for a stabilization in the prices of key commodities, particularly oil, gas, and agricultural products. Let's dive into oil first. The end of the war has eased geopolitical tensions, leading to a more predictable oil market. This stability is a welcome change for investors who've been riding the roller coaster of fluctuating oil prices. Now let's shift focus to gas. With Ukraine being a key transit route for gas from Russia to Europe, the end of the conflict has ensured a more stable supply. This in turn has led to a steadier gas market, making it an attractive sector for those looking to invest. Agricultural commodities too have seen a similar trend. The return of peace has allowed for resumption of farming activities, leading to a stabilization in prices of agricultural products. After all, peace and stability are key ingredients for a thriving agricultural sector. But it's not just about oil, gas, and agriculture. This stabilization has opened up investment opportunities across the board. The energy sector, for instance, has become increasingly attractive with stable prices and renewed focus on renewable energy sources. The agriculture sector, on the other hand, offers opportunities to invest in companies that benefit from stable crop prices. And let's not forget the metal sector. With the war over, mining activities have resumed, leading to a more predictable supply of metals. This makes metals another sector worth considering for investment. In essence, the end of the Ukraine war has had a profound impact on commodities. It's brought about a period of relative stability, presenting investors with a myriad of opportunities across various sectors. The post-war period has brought about a stabilization in commodities, opening up new avenues for investment. Lastly, let's take a closer look at specific regional markets. What growth prospects have emerged in various industries? As the dust settles from the end of the Ukraine war, regional markets are adjusting, and new opportunities are coming to light. Let's start with China. As one of the world's economic powerhouses, the end of the war has opened up new avenues in technology, energy, and manufacturing. This shift is likely to bolster China's economic growth and provide a plethora of investment opportunities. Moving to Europe, the end of the war has brought a sense of stability. This newfound calm is expected to stimulate growth across various sectors. In particular, the manufacturing industry stands out as a potential growth sector, given Europe's rich industrial heritage and advanced infrastructure. Across the pond in the United States, the focus is on the technology and energy sectors. The end of the war has opened up opportunities for tech companies to expand their global footprint, while the stabilization in energy markets breeds room for growth and investment in renewable energy sources. Last but not least, we turn to Hong Kong. Known as a financial hub, Hong Kong presents unique opportunities in the aftermath of the war. As stability returns to the currency markets, currency traders and hedging strategists could find lucrative opportunities here. Moreover, the stabilization of commodity prices, particularly in oil, gas, and agricultural products, suggests potential investment opportunities in the energy, agriculture, and metals sectors. As we can see, the end of the Ukraine war has had a significant impact on regional markets, offering a multitude of investment opportunities. This new era of stability and growth is not just a relief for those regions directly impacted by the war, but also a catalyst for global economic advancement. So, whether you're an investor looking to capitalize on these developments or simply someone interested in understanding the global economic landscape, it's clear that these regional markets hold a lot of promise. As we can see, the end of the Ukraine war has had a significant impact on regional markets, offering a multitude of investment opportunities. Now that we've covered the main aspects, let's summarize what we've learned today. The end of the Ukraine war has had significant ripple effects on global markets. Stock markets, in particular, have experienced some noticeable shifts. We've seen potential growth sectors emerge in various regions, including technology, energy, and manufacturing in China, Europe, the USA, and Hong Kong. In the realm of forex dynamics, the war's conclusion has had a profound impact on currency exchange rates. This has opened up opportunities for currency traders and hedging strategies, particularly with the USD, EUR, CNY, and HKD. Commodity stabilization has also been a key post-war development. The prices of oil, gas, and agricultural products have started to stabilize, creating investment opportunities in the energy, agriculture, and metals sectors. Lastly, we delved into a regional market analysis, highlighting the growth prospects in various industries across China, Europe, the USA, and Hong Kong. These are complex times, and the road to economic recovery will be a journey of ups and downs. But within this complexity lies opportunity. As we've seen, sectors are growing, currencies are fluctuating, and commodities are stabilizing. These are all key areas to watch as an investor. Remember, as an investor, staying abreast of global changes is crucial for making informed decisions. Thanks for watching, and until next time, keep investing wisely.